Okay, so yesterday I was looking for buys from this area because the market was playing at this particular zone. So I expected probably price to come and take this liquidity, this area. There was some sort of engineering here. Then we go, and my target was all the way to the daily area of liquidity. But unfortunately, the market didn't come to trigger my entry. So I also tried to get more entries from here, price didn't. So I had to go and look for sales. I was now waiting for the market to go all the way inside the daily area of liquidity. I tell you guys one thing, when it comes to uh, coordinating time frames, it's very important you understand the basics of price action, because if you can't understand that, it will also not be easier for you to know what is happening. If you look at this chart keenly, I want you to observe something. Uh, before gold, initially, before gold had gone and formed a new high at this particular area, around 29.50, I think 29.56. Then, uh, before it formed a new high, we had this zone where we have these weak reactions. It was more of like, it was like a support zone. We had buy supporting price, but initially, before we had a rally to the downside, we first of all had a massive candlestick that broke. We had a massive candlestick that broke and took out all these support, or rather, the buyers were seated here. That was an indication that we're going to sell massively. I think this was Monday the other week, and then I think, let me see. I think it was on a Monday. No, it was on a Tuesday. So the setup happened from the night of Monday. Tuesday the market dropped, and then on Wednesday the market tried to range around this area, this candlestick, and then now on Thursday and Friday the market dropped massively, and that's when we had the this low of 28.32. Now, if you look at the market or look at your chart structure wise, this should tell you something. You see, initially, if you apply the concept I was talking about, impure liquidity, that's why all these concepts are very important. If you look at this area, it means it's a significant zone. The moment we had momentum of bears coming in, and now price has pulled back to this zone, that means we also still have, not unless maybe today's candlestick closes above this area, then we'll know the story has changed. But this tells us this area, we have a lot of selling orders. Are we together? We have a lot of selling orders at this particular zone that I've just highlighted. Now, if you look at this structure very well, if you look at the daily structure very well, we can see um, this was the lowest point that we had, and I consider this as a shift point. And this shift point, it gave us an inside formation. Consider this as a shift point. So anytime you see the market forming a shift point, you know, there are scenarios where it will first of all do a transition and then it drops. But now this one, it did, the market formed a shift, but before it formed a shift, you see this week and this candlestick, the body of this candlestick closed below this week. So which means we are bearish. Now, when the market formed a shift, it left us with an inside structure or inside formation, which is this daily candlestick. So I had to refine, because I know that there are those guys who entered yesterday and they were wiped. They didn't know where to enter. So I gave you a secret. You see, the whole of this zone was daily area of liquidity, which means we have a lot of sellers here. But the question is, which is the best area to enter? So I waited for the market to come into this zone, which happened yesterday, the evening session, and then during the New York session, and then the market started dropping. Now, before we go all these, for someone could have gotten also entries for buys to take us to the daily area of liquidity before maybe continue selling. But again, I always tell you guys, as much as you're looking for opportunities in the market, it's very important you understand what is happening. You need to look at price action, because this candlestick might come here to 2,900 and then decide to go up. So that's why you need to know when to take profit and which are the best areas to take profit. So with the daily time frame, if you go to 1 hour, so that we can understand what was happening from the bottom before we come to the upside. Okay, before I got there, if you still come back to the daily time frame, initially we had daily area of liquidity at the bottom. If you look at this structure, it looks like this. and then the market dropped. So this area, it's our daily area of liquidity. So if I put some lines here, so you also need to know how to mark validation and invalidation points. So I normally use green to show my daily area of liquidity. So that is daily area of liquidity. If you take your Nini to the Nini, you see that, you see how the structure looks like, but now you can always mark with the candlestick. So this was my daily area of liquidity. So from this daily area of liquidity, I'm anticipating price to go back to the inside formation, maybe probably before it comes to take out the 28.32 price level. Maybe we'll target the next area of liquidity, which is at around 27.65. So the thing is, you don't know when things happen. Your work as a trader is just do the analysis, be patient, wait for everything that you need to happen before you take the trade. Now, to come to the 1 hour time frame, focusing on the green zone, which is our daily area of liquidity, our first shift point happened at this particular area. Time frame coordination. So we have this validation and invalidation point. So this is our shift point. On this shift point, do we really have anything that can give us a confirmation of buys? So if you look at this, we don't really have anything serious. Probably we could use this structure and any other structure that is near. So anytime you find high probability setups are always the inside formation, but if you find an outside formation or inside formation, you can always start with the outside formation. If the price doesn't hold either for a buying or a selling case, you go to the extreme liquidity area in terms of formation. Now, so if I come back to 15 minutes, because I can't see anything, I need to see why I could have gotten maybe buys from this zone to push me all the way to the daily area of liquidity, which is on the green zone. Now, if I go to the 15 minutes, still on the daily area of liquidity, I could see we had a formation. I could see we had, okay, this is our shift point, the 1 hour time frame. Are we guys following? Are we guys following? Are we following?
Yeah, we are following.
Okay, so this was our shift point on 1 hour. Inside our 1 hour area of liquidity, or I mean below the shift point, what did the price do? The price left these structures. We have this structure, so you need to understand the consumption. So if I look at it, there was this structure here. If you're keen enough, there was a shift point here on 15 minutes, and then there was this structure. So if you're keen on probably on Friday, you could have taken this entry and you could be holding up to now. So the thing is, you need to know how to mark your chart so that you don't miss opportunities. Because ukiangalia hapa, this was a shift point on 15 minutes. Before even that nini happened, this was a shift point. Then we had a structure. We had an inside formation. So what did price do? Price came, reacted at that structure, and it's been going. And came and break now the 1 hour shift point. And when it was doing that, price had left, so we didn't have reason to come all the way down. So maybe the last area we could have come to was either here or here. Let me try to zoom it. So the immediate structure that I see here we have is this area. Remember the shift, this is 1 hour shift point. Huh? H1. So that's 1 hour shift point. So inside the formation or inside the, do you have anything? Yes, we have this. We had this, we had that structure that is clear on 15 minutes. So my thing is always, if I measure the risk and it's comfortable with me, and I'm okay with it, I put my entry just, if you look at the stop loss was around 20 pips. For gold, 20 pips, I don't think if it's a bad. 20 pips ni risk nzuri, because hata ukitafuta 100 pips, that's an RR of 1 to 5. So we have that. So we have that formation. Just doing a recap of gold. Then if you go further, this is enough to have, because even if also you look at it based on the other aspect that I taught you guys, that's where you really need to understand price action. This momentum candlestick, whatever was happening was just a pullback. So this is where the momentum kicked in. So price was coming to take more liquidity before it rallies up. So if I look at even 5 minutes just on that 15 minutes inside formation to see what was there, you can clearly see we had some sort of liquidation that was happening. This was first liquidation, second liquidation, third liquidation. So when price came, it reacted here. So if this could have failed, our next area to get buys was supposed to be where? Here. That's how you trade. Now, go back to 15 minutes and see what happens. Price came there, reacted from this zone. Even if you are to get your buys from that area and just look for, this is an enough reward. So you could have taken your buys from this particular area. and you set your take profit exactly at this high. That is an RR of 1 to 8. You are risking 20 pips. You're risking around 20 pips, and you're targeting 170 pips. So that's an RR of almost 1 to I think 8, which isn't bad. So depending on what you're risking, this will make sense. Now, from this particular zone, if I go back to 1 hour, just to, I'm following price towards the daily area of liquidity. So now that we had buys here, which was another area, I had to look also on the other side. What we have, there was liquidation. These areas were the last area that price was going for was probably here. That's why I was so much confident in looking for buys. Probably kukuwe na reaction ya flip. If not so, we aim to the extreme zone. So the whole thing is from the buyers we were bullish. So the last area I had for buys before market went up was, I was expecting, because there was some momentum from here, I was expecting price to come probably up to this point, and then we go up, but it didn't come. So so I had this last area, price didn't give me a pullback to this zone, then we went. So now that we are in the daily area of liquidity, which is our formation, our inside formation, what do we need, or what are we looking for? So in the daily area of liquidity, when I do my refinement, the two dotted lines, easy greens, make them a bit bigger. The green dotted lines act as my daily area of liquidity. So when I look inside this daily area of liquidity, what do we have? What do we have? We have these wicks, which should give us some information. And I told you guys, whenever you're doing your analysis, always look for your entries to the farthest point of FM, the furthermost deviation. So if I go to 15 minutes, I want to see what is happening. The whole thing is I want to get the minimum risk. I want to get the minimum risk, the best risk. If I look at here, we could say we have some liquidity engineering, but still we have some wicks here that was not yet consumed. So I wanted full consumption of liquidity. If I go to 15 minutes, just looking at the extreme point of the FMD, near the validation and invalidation point, I saw this, which means this is an important zone. So I had to go to my last time frame, which was 3 minutes. I even checked on 1 minute, but because I got a good risk on 3 minutes, I was good to go. So on 3 minutes, I saw there was some sort of look at this. This is a flip. If I take it to the line graph, this is a flip zone. So if you measure the pips from here, it was more than 20, it's around 26, if I'm not, yes. There you have, it was around 26. So I had to give my trade that space, but at the same time, besides giving it the space, I looked at from this reaction, do we have any other, I could have placed my stop loss at 29.28, I'll still be safe, but I decided with, so that I can give my trader a better space to breathe, that was around 11.4 pips. So I had to give it 15. So I was still safe. So with that, place my pending order, and what the market did, the market came. If you look at what happened, let's just go to one. The market came, tapped that particular zone. If I was to put that SL based on whatever I've just shown you, I could have an SL of around 8 pips, but I felt like, no, let me make it to be 15. So what happened? The market came, tapped, and after tapping my zone, the price can sell from there. It dropped. So you look at which area do we have for liquidity. If you go to 1 hour, we have these weak overlaps. So if you go to 15 minutes, it's a structure. So I said my first take profit will be at this particular area. Now, when the market was coming down, I realized price formed a shift point at this particular area, still inside the daily area of liquidity. There was a shift point. So this thing you need to understand how to do it. There was a shift point here, and the price had left 15 minutes inside re-entries. So price did all this. I set up some pending order overnight. Price came near my entry because my entry is on this line, not this one. So I couldn't use that. So this morning, that's when price came here. And if you look at what has happened, already price has delivered over 120 pips. So do we have anyone who has a question? So that is as simple as it is. So I'm expecting gold to keep on dropping, because now, even if you look at these, we have some sort of liquidities. Even if you look at these, we have some sort of liquidities. In a basic manner, we have liquidity here. So I'm expecting probably price to come here, then Puccini, then we'll be good to go. But if it gives us, it depends now with what happens on 1 hour and daily time frame. You know, it is idea, and you how to manage this setup. up maybe to the farthest lowest point. But the market doesn't move in a straight line. I could be able to scale up on the entries based on the structure that I'll be getting the way down. I hope that is clear. So I wanted us just to do a 40-minute session for a recap. And from there, we can look for some opportunities which we can trade this New York session. So, perfect. Now, if you look at gold right now, if you check on 1 hour time frame, and even if you check, when it comes to looking for the trading opportunities, you just look at 1 hour and 4 hours, but you need to understand the liquidation process. That's what guides you on where you are heading to. Because if you can't understand the liquidation process, you're going to have a challenge knowing where you are. So for day trading is like advanced scalping. That's the thing. Because for day trading, you can hold your trades for like within a day you are done. You can hold your trades for 5 hours, 2 hours, 3 hours, and all that. But for scalping, it's just for a few minutes. So if I look at what we have right now, we are still trading near the daily area of liquidity. So if you look at what we have, price has to do a couple of things. So on 1 hour time frame, there's a likelihood of price again coming back, because these now, you see now, if we draw these acts as an area of liquidity. Why? Because if you look at how this candlestick closed, it has closed above this point. So which means the market is doing a liquidation. Maybe it comes and consume any left liquidity, would you? Then now it starts dropping. So when it will drop, I look at the extreme point. Maybe let's say if it's here, I see a shift point here now. For confirmation entry, I'll wait for, I can get an entry here. I mean, on 1 hour, if I see a shift, I'll go to 15 minutes and look for any valid reason. It could be an inside formation, outside formation, or any sub area of liquidity, and then I can have my entry from there. But that is it for me to swing and hold that trade for long. But for what we have right now, maybe we can be looking for buys. What we have right now, we can be looking for buys because price did this, came back here. Then now this is acting as an area of liquidity. So maybe let me mark those areas and see. Let me start with 4 hours and then I check on 30 minutes. Then I see if we have any structure. So on 4 hours, it's more of like consolidation. So I don't have any anything, because if you look at, maybe I can use this, but no, this week there's nobody that has closed above. Look at the bottom. That can't give me anything. So if I check on 1 hour, I have that. And I check on 15 minutes. On 15 minutes, okay, sorry. First of all, this is like daily area of liquidity. Let me do this. So we have that, and we have this. So this is like daily area of liquidity. Now, if I go to 15 minutes, I need to look at the extreme point of the validation and invalidation point. So if I go to 15 minutes, so do we have anything inside? Yes, we have. First of all, we have has price really done a consumption? Okay, let's see. We have this area. First of all, price. Okay, we had. This is a shift point. I think this shift point, it has collected this based on this week. Imechukua easy liquidity zap. So I could have an entry based on this week. Let me see. But I will wait for the New York session. What's the time? do the necessary. So I can focus on this area, but we can go further to lower time frames, like 5 minutes, and see what we have. Ukiangalia hata kwa 30 minutes, you see this has been consumed because of this weak reaction. So we can go to 5 minutes. Let me first of all mark the area. We can go to 5 or 3 minutes. Still have that long wick. Go to 1 minute. So if I look at 1 minute, we have a shift. So probably we could get an entry based on liquidity engineering. I will go for the lowest liquidity engineering. Hold on. Can you guys still see my screen? Can you guys see my screen? Someone to confirm, because it's like it has